Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CGN Mining Company Limited annual report. CGN Mining Company Limited offers a range of businesses and services that cater to the nuclear power industry. At its core, the company specializes in the development and trading of natural uranium resources to nuclear power plants. This involves investing in and operating natural uranium resources across various countries including China, Kazakhstan, Canada, and the United Kingdom. The company operates through two main segments: natural uranium trading and other investments. The natural uranium trading segment is focused on buying and selling natural uranium resources to meet the demands of nuclear power plants. On the other hand, the other investments segment involves investing in various related businesses that support the development and trading of natural uranium resources. In addition to its core business, CGN Mining Company Limited also engages in other activities such as investing in natural uranium resources. This suggests that the company is involved in exploration, extraction, and production of natural uranium resources. Overall, the company's services are designed to meet the needs of nuclear power plants by providing them with a reliable source of natural uranium resources. CGN Mining Company Limited market capitalization of $30 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that CGN Mining Company Limited holds a significant advantage in their industry. CGN Mining Company Limited trades at a higher price-to-earnings ratio of 99 times and a higher price-to-book ratio of 7.78 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 50% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of various regions and business segments. On the growth side, significant increases were observed in HKSAR, Europe, excluding UK, US, and Canada revenues. Additionally, trade receivables and interest receivables from key partners also contributed to revenue growth. In contrast, revenue declines were noted in PRC, other than HKSAR, UK, and Kazakhstan regions. The trading revenue from offtake natural uranium products also experienced a decline of 4%. Furthermore, the natural uranium trading business saw a 20% decrease in revenue compared to the previous year. These findings highlight the importance of regional and segmental performance in driving overall revenue growth or decline. Net income and profit margins experienced significant changes between 2024 and 2025. The net income saw a substantial increase, rising by plus 32.6%, $192,798, and plus 38.5%. This growth was also reflected in the absolute numbers, with net income increasing from HK$342 million to HK$453 million. The improvement in profit margins can be attributed to increased gross profits and reduced losses. The net profit margin rose from 3.97% to 6.59%, indicating a significant increase in profitability. However, the gross profit margin experienced a slight decrease from -0.77% to 1%. Despite this, the gross profit margin of the natural uranium trading segment improved from -0.77% in 2024 to 1% in 2025. The overall increase in net income and improvement in profit margins suggest that the company's financial performance has strengthened between 2024 and 2025. The growth in net income can be attributed to various factors, including increased revenue and reduced expenses. The company's financial performance indicates a healthy trend. One key indicator of this is the generation of positive operating cash flow. According to the provided information, the company has generated an operating cash flow of £800,342. This figure suggests that the company is able to cover its operational expenses and generate surplus funds from its core business activities. Furthermore, there is no indication on page 40 that the operating cash flow is negative, which further reinforces this positive trend. Overall, the data points towards a financially stable and thriving company. The company's debt level has experienced significant changes over the past year. Total debt has increased substantially from $3,732,188 to $714,735, indicating a substantial rise in borrowing. Furthermore, total liabilities have also seen an increase of 4.7%, with current liabilities rising by 4% and loans from fellow subsidiaries increasing significantly. In terms of interest expenses, there has been a notable increase as well. Interest expenses on loans from a fellow subsidiary have jumped by 100%, while finance costs have risen by 34.3%. This significant rise in interest expenses is largely due to the increased borrowing from fellow subsidiaries, which has led to higher interest payments. Overall, it appears that the company's debt level and interest expenses have changed significantly over the past year. The substantial increase in total debt and liabilities suggests a growing reliance on borrowed funds, while the sharp rise in interest expenses indicates a corresponding increase in financial costs. The performance of various segments and regions within the company has been a mixed bag. In terms of natural uranium trading, the segment has struggled to turn a profit, with a low segment profit of $23,491 HK$0 recorded in the latest period. Furthermore, liabilities in this area have increased compared to the previous year, indicating ongoing financial challenges. On the other hand, the company's other investment segment has been a standout performer, boasting a high segment profit of $730,121 HK$0. This significant increase in profitability suggests that these investments are generating substantial returns for the company. Overall, while some areas require improvement, others have shown impressive growth and financial performance. The company has a history of paying dividends to its shareholders. This is evident from multiple references in the financial reports, specifically on pages 38, 43, and 44. On the other hand, there is no record of the company buying back its shares, as stated on page 17. Concerns about inventory buildup are evident in the recent data. The carrying amount of inventories sold decreased significantly from $690,392 to $6,800,957, indicating a substantial reduction in sales. This decline is a cause for concern as it may lead to inventory buildup, which can be costly and inefficient. The issue of inventory buildup is further highlighted on pages 34 and 37, where it is explicitly mentioned. These references suggest that the company is grappling with managing its inventory levels effectively. The decrease in carrying amount of inventories sold suggests that the company's sales are not keeping pace with its inventory levels, leading to a potential buildup of unsold goods. The implications of inventory buildup can be severe, including wasted resources, reduced cash flow, and decreased competitiveness. Therefore, it is essential for the company to address this issue promptly by optimizing its supply chain management and inventory control processes. That concludes the financial summary for CGN Mining Company Limited. Feel free to comment below, and I will be happy to answer them when possible.